Yeah, where you been, Ray? Ray, I've been worried about you. I was this close to sending an email. This close. Thought about it like 10 times. Seriously. I was going to get to it. Figured I knew what you were up to, though. Figured I know what you're up to, but I think we need a convo. I need to get caught up. All right, you guys ready? Yeah, boy! Yeah, okay, cool. Coolio. So welcome to Forex.Today. Oh, I got to mark this stream. There we go. Welcome to Forex.Today, the YouTube and Twitch and Facebook community of over 17,000 foreign exchange trading souls. Please ask questions, get involved. Therefore, I can tailor your experience. You want to know technicals? Nice. You want a scalp spot, swing, carry? Gotcha. You want to do some fundies? Great. You want to do some intermarket stuff? Like I think we should look up GameStop today, just for fun. Look at what the dumb money do. And what else? I don't know. So like you can have whatever you want. You're the boss. I'm just a humble currency trader that's been doing this for a couple of decades, and I'm willing to share my experience and just do deep dives into things. So even after all these decades, I'm still super enthused for what I do, and I'm thankful for that. I'm grateful for that. Remember, you can never be truly happy unless you're grateful. So I'm very grateful for the opportunities I have in front of me, and I'm very grateful for the positive energy and respect that you show me every day. So thank you for being on my team. Without further ado, while you're subscribing, commenting, and giving the thumbs up button, we'll roll the intro. Let's go! Let me remind you that trading is risky. It is not appropriate for everyone. Your past performance does not predict future results. I recommend that you stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Hey, what's up? So it's the AM in the NYC. Stock market's going to open in 90 minutes. We also have the FOMC meeting. The announcement is at 2. The press conference is at 2:30. So lots of very interesting things going on. And also the consequence of all this easy money is over leveraging. Even professionals over leverage. Remember, most hedge funds suck. Hi, I'm a hedge fund manager. Oh, really? You probably suck. Some of them are really good. Some of them make a lot of money. Some of them make really good choices. Some of them do lots of research. And the rest trade dumb money. And they make, once in a while, they make dumb decisions. Like maybe going all in on a short. So if you're not familiar with short trading, we're going to take a look at GameStop today. One of probably the most heavily shorted stock in America. And of course, when money was freed by the Fed, dumb money could leverage up and get more dumb money and do really dumb things. And one day, the snake charmer gets bit. I watched a movie long ago. They said, do you know how to tell in a crowd which guy is the bomb maker? You're trying to catch a bomb maker. You're the CIA or something. You're like, which guy is the bomb maker? And he's like, look for the guy with missing fingers. That's the bomb maker. It happens every time. So anyways, every once in a while you get bit, or every once in a while it blows up. So that's happening to a lot of people. And I think that's a consequence of dumb money and dumb money leveraged up because of the liquidity that we have in the world and low yields and such. It's just a consequence of what we're doing. Some people might say that's indicative of the top of the market, but that's generally fear. I mean, it's not wrong, it's just not right. So what will happen is the fundamentals will prevail. There will always be exaggerations in the market that stick out, like a GameStop today, but it doesn't change that the easy money will continue. It's this crisis and then the next. So Johnny says bubble burst. So that's the thing. Like people will say that's the sign. That's the sign of the top. But many people said that during the .com days. And the stock market went up and up and up and up. And they're like, this can't happen. This doesn't make sense. This isn't fundamental. This is overpriced. This is crazy. This is the top. This is the top. This is the top. And after saying that for 9 years, eventually they were right. Well, we're not interested in a 9-year negative hold. So it's more like, it's a sign of over leverage and dumb money. But remember, dumb money needs to die. Okay. If it was a bank, the government would bail them out. But that's dumb too. A hedge fund, if it blows up and just rich people lose money because they made dumb decisions by investing with dumb people that do dumb things with their dumb money, then that's good. Then the herd gets culled. And how do you cull the herd? With a margin call. So that's happening today. So anyways, my name is Wayne McDonald. I'm an economist. I'm a trader. I love markets. I love investing. I'm an entrepreneur. All this stuff adds up to I'm very happy to be here. So again, ask questions, get involved, take notes, leave comments, treat your other currency traders in the chat room with dignity and respect. And I think we'll get on fine. I'd like to thank TradersWay.com. TradersWay.com is a broker. You're going to need a broker to execute your trades. From what I can tell, they don't B-book you. Maybe they do, maybe they don't. But again, if you go back to what happened when the Swiss National Bank actually cold stone looked in our eyes and lied, other brokers went out of business because they were holding all the other trades, essentially trading against their clients. And the market collapsed overnight, and you had the largest foreign exchange broker in the world essentially go out of business in the United States. And you had other brokers, a very large international broker, go out of business. Why? They were trading against their clients. It's called B-booking. It's not illegal. It's not bad. It's just the consequence of that. If you're very, very, very wrong, even if because of an exogenous shock, you're going to pay the penalty. And that means going bankrupt overnight. Traders Way at that point had no effect on them. And the only way, because I can't see what they do, right? The only way that could happen where a bunch of major brokers go out of business overnight and it has no effect on Traders Way, it's because they actually entered your trade into the interbanking system. So they're like, yeah, well, if you made bad bets, you're going to lose money, but it won't affect us as a broker. So wow. So that's why I'm adamant about our relationship and how positive it is. Of course, they also said, hey, can you educate people to make them better traders? We actually want them to succeed. I'm like, yeah. So anyways, if you like a partner on your team like that, remember, you're going to need an execution partner, right? You're going to need a good dealing desk, tradersway.com. You're going to need it. I'm telling you, you're going to need it. Yeah, boy. All right, cool. So I got my coffee. That's cool. Got my coffee. We got our charts. We got FOMC today, so don't know about volume and volatility. I guess we should just take a look. Honestly, I haven't even looked at it. GameStop stock. Is this it? Yeah, there we go. Yeah, it was $7, right? Now it's 150. Whoa, what? Yeah, it was $7. It was $4. It was $6. It was $10. It was $14. It was $12. 14, 20, 20, 20. Oh my God, 150. It's up today 63%. Okay. Maybe on the way to 250. Okay. Have you ever been to a GameStop? It's kind of like a cheap convenience store in a big city where you got over here, you got potato chips, over there, you got beer, cheap wine, t-shirts, tourist swag, and a bunch of vaping stuff at the cash register. It's really, the stores are small, often dirty in my opinion, overcrowded, but you go in and you buy gaming stuff. And very often used. It's where you go to sell the game you finished and buy a used game that you haven't played yet. And it's interesting because it's sort of a side market if you think about it. Like even the new gaming consoles, almost all of it's on the cloud now. It's amazing that PlayStation 5 and the new Xbox and stuff that they even have consoles. It's right. Google has a version where you just have a controller and that's all it is, and you play the games. There's no physical console, right? You just play the games over the cloud, and therefore you don't even need the game disc, right? So it's amazing that we've moved to everything online and on the cloud. And yet GameStop is around, okay? Because it's like retail. Go to the store and it's not a good experience. And I bought stuff there from them, and they have a very convoluted point system, like a reward system. And I'm like, what? Like, it's so complicated. So it's okay. It's just not great. So if you look at it in this context, a lot of people said, this company is dead. The model is dead. It's so 1980s and 1990s. There's no reason to have a GameStop. And so you can see it was a $30 stock back in 2016. And I think if you can go further out, it was way up here, $60 in 2008. But even before then, right? Like it was never more than a $60 stock. And then it came down and came up and came down. And people were debating, like, there's not going to be a need if all the games go virtual, if you will. There's no physical disc to return and trade, then what's the point, right? So I was just like, well, then who buys the stock, right? All right. So hedge funds, and I was getting here with the liquidity that happened in 2008 and then, even more recently. As liquidity was pumped into the market, hedge funds had access to cheap money, aka leverage. And this was one of the highest, or let's say most shorted stock in America, aka the world. So hedge funds were shorting. Okay? And somewhere recently, so this was a $4 stock 3 weeks ago. It's $150 now. Okay? It's up 92% for the day. It was $3.78 late last year. Okay? So anyways, no, I thought that said 2021. So no, so a year ago it was a $10 stock. All right, so everybody's shorting, and I mean shorting. Huge amounts, huge levels of hedge funds shorting with borrowed money. And for whatever reason, and what I would guess is that it's hedge funds versus hedge funds. Because some hedge funds realize that the other hedge funds can't get out. So now they're like, oh, you know what? We're going to borrow leveraged money and we're going to buy it. And we're going to push this stock up, which means other hedge funds will be losing money, losing money, losing money, losing money. Remember, they're leveraged. So when you get to the point of margin call, giant amounts of short selling gets taken out of the market. How does a broker, because remember, they need a broker too, how does a broker exit your short position? With a buy. They offset it. So now, those hedge funds that were short $5 billion, of GameStop stock suddenly had to get out immediately because they had to cover. Because remember, now they have to come up with the cash. Okay? Meta says it might have had to do with the Reddit community. Yeah, but then that gets followed up with someone actually placing a trade, right? So what I'm saying is suddenly people were buying this, but this is more of traders exiting their short positions. Because where would you put your stop on this? Right? Where would you put your stop? Here? Oh, my drawing tool doesn't work today. Let's see if I can do this. No. Random. Happens every once in a while. Okay, I don't have a drawing tool. Let me go back. Okay, so you would put your stop somewhere in here. Hua? So you were selling maybe, even back in 2008 or 2014 is probably when these people got in, short at 50, right? Short, and boom. Out. Okay? You should never, ever trade like this. Ever. Okay? Out of the 10,000 hedge funds, the ones that tend to make money are the same hedge funds. The same 100 hedge funds that were profitable 10 years ago, were profitable 20 years ago, and everyone else comes and goes based on how much they guess and how much they happen to get lucky. Venture capitalists are also the same. They borrow money from people and institutions. They make a bunch of investments into early stage companies, of which 90% will fail. But we love venture capitalists because one dude gets lucky and the startup actually produces something, and now and we're like, oh my God, venture capitalists, they're so awesome, they make so much money, I want to be like, it's all bogus BS, nonsense, degenerate gambling. But the same 100 venture capitalists, even though now there's 10,000, the same 100, even the same 10 make money year after year. Now, why is it? Well, there's sort of a network effect to the whole thing, but my point is they stick to sort of the fundamentals. Now, when you say fundamentals in Forex versus fundamentals in trading stock, that means something different. But what I mean is you do something because it's not a guess, but you're doing stuff on sort of a macro level analysis. Okay? Betting against a stock probably isn't something that I would recommend. That's all. It's a giant guess. And you remember I told you about Bill Ackman's trading during the COVID crisis, how he reduced his risk through an options trade, right? He hedged and then made money on the way down, took the money out of the options trade and bought back into the stock market. And I said, that was really, really, really good. And that's how you should do it. And that was the best I've seen. But I've also seen him do stupid things like shorting stock over and over and over again. So this year, well, Billy, we hail Billy, but dude, he's lost other people's money doing stupid things too. So you don't want to worship these traders that get all the headlines because they got all the headlines, because generally speaking, they only get paid when they're degenerate gamblers. Now think of it another way. They're not offering diversification to an investor who's taking on an investment into a hedge fund. They already have diversification in other types of assets. They go to a hedge fund to say, let's get some risk on, let's make some money. I want you to outperform the benchmark, not be a benchmark. So the only way they can outperform a benchmark, which is diversified, which means it invests in lots of things, you have to invest in one or two things. And if you get them right, you'll outperform because you did some sort of, right? So anyway, so these guys come and go. They're angels one day and devils the next. And you shouldn't get caught up in all the news and all the hype. What I want you to do is focus on long-term macroeconomic trends that create flows of money around the world. Literally, are Americans going to buy foreign goods next year? Or are they going to buy domestic goods? And that will change the flow of money, and this is what we do. You never want to get yourself in a situation where you're betting big and you need an outcome. It's horrible. Absolutely never do it. Okay? There are people here that have destroyed their own careers and maybe other people's lives. They might actually have to be calling people up saying, okay, I blew out the fund, but we're still short on the margin call, meaning short of cash. So not only did I lose your $25 million investment, I need you to pony up $6 more million. How'd you like to have those calls this morning? Okay. And then as a question on leverage, I want you to define leverage not by what your broker promotes in the ad, 100 to 1, 200 to 1, 50 to 1. You just want to have proper lot sizes relative to your account size. So how much is available is irrelevant. You can have 50 to 1 or 500 to 1, but you still have a certain amount of cash in your account, and you adjust your lots accordingly, and that's how you make your leverage. The way I answer that question is I want you to think about your worst month ever. The one that you can't even imagine it went so bad. Okay? So think about it. If you trade, let's say 25 times a month, it should be more than that, but you might not be doing 50 trades a month yet. But let's say you're doing 25. That's a little more than one a day. Okay? That's probably reasonable for most of you, but you're going to have to up that at some point. But you're doing 1.5 trades a day for a month. What if they all fail? What if every single one was a loser? What's your average loss, pip-wise? What is that monetarily, right, based on your lot size? And then adjust the numbers so that those 25 losing trades in a row, your worst month possible, adds up to a certain amount of money. So let's say $1 a pip for a mini lot, $10 a pip for a standard lot. Okay? Add that up. How many pips per loss? Okay? Now you got that? And then you look at the total dollar value relative to your assets under management, the money in your account, and then say, how would you like to record that on your track record? Remember, your track record is a 5-year stretch, which means you got to keep it around. If you talk to a client, you have to show them what you did 4 years ago. Okay? And I want you to reverse engineer everything and say, all right, here's the worst month in the last 5 years of me trading. I lost 25 trades in a row, 50 pips each, and it added up to a 10% loss. Because you can recover from 10%. 10% is not the magic number, but if you have a 20% drawdown, you're fired. No one will ever invest in you, ever. If they do, they're dumb anyways, and it doesn't matter. You'll lose their money. They don't have any money anyways. Nobody cares. Okay? But if you get to the point where your worst, you can't even imagine you'd be that bad. Okay? You're like, Wayne, there's no way. Well, I want your risk of ruin to be 0. So your worst month imaginable is not you not getting out of a trade, or trading giant lot sizes, your worst month ever is you just have lots of bad trades, like you just couldn't connect. And it's not a big deal. I mean, it's a big deal, but something you can recover from. Okay? That's how I'd want you to think about it. Okay? Ananda? So that is, you're going to say, oh my God, Wayne, that is very, very low. Yeah. So in the past, in my portfolios, I've had rules like for every $100,000 in cash, I trade one mini lot. Now, I'm not saying that's the golden rule, but I've had that rule. And you might say, oh my God, Wayne, I only have $2,000 in my account and I'm trading a mini lot. Yeah, well, you're leveraged 50 times more than I was. But think of it, right? But think of it, with my risk so low, my worst month is not a game changer. But then again, my upside isn't going to be ridiculous. I'm never going to have 20% months. Well, I know. I'm not trying to get rich quick. I'm trying to create an income and asset appreciation with the lowest risk possible and the lowest volatility possible. I preach to teach, because some of you never had this, right? Isn't that cool? I'm telling you, slow and steady is way more important than fast or big. But you're not going to fly in a jet. You might not have a Rolls Royce. Okay? But I want you to think about that too. Okay? Those are usually illusions that are provided to the desperate or the weak. Okay? Quick and easy. Look, just press a button, you'll get a Rolls Royce and a jet. And people far better looking than you will be attracted to you. Just click this button. I'm like, dude, come on, wake up. Okay? Doesn't work. That's not even real. Right? People fall for it because they're desperate. And it's sad. So I want you to create value. Much different than just click a button. It's not easy and it's not quick. All right. So anyways, let's move on. Okay? All right. Aussie down, pound up. Euro sideways to neutral, Kiwi still strong. CAD down, Swissy up. Yen down, up, and then up, and then dollar up. Cool. I like this. It probably won't put me in a trade today. Again, looks fairly neutral, probably related to the FOMC. Excuse me, belch. I'm still preparing for February and March. And I'd like some down so I could buy it. Ricky says, I am value. Well, what you should be is able to create value, right? Are you value able? Otherwise known as valuable. Oh, yeah. I think I canceled it out, though, on this account. Yeah, it's up there, though, right? What am I doing? Yeah. It's up there. It's close. I got to go smaller. See, I don't like the 618, so yeah, I was watching, okay. So we had plan A, and then plan B was up here, and I put a limit order there, but I've canceled it. Okay. Young Wolf, the link is in the description below the video. Okay, that's how you get it. Okay, so plan A and plan B, it's elevated, but now you need the rollover. Okay. I'm okay also waiting because I know it's too early in the season. Yeah, USD looks strong today because of FOMC, because people are exiting trades to wait. Right? Oh, is that right, Brinsley? Brinsley says no rand on MT5. Oh, well, use MT4. Here they boo boo. You gotta get the picnic from the picnic basket. Right? If you want rand, MT4. So anyways. Not sure why that would be, but okay. My peso. Oh, my peso. Oh, my peso. So we set this the other day too, huh? And, oh, my peso. Okay. So we knew this was early. Okay. We knew this was early. But, yeah. The next one would be way the heck up there. I don't know if that one's real or not. So yeah, I'm kind of caught, right? I'm kind of caught on this. Kind of caught. And I ran so far away. No, Johnny, no. That's way overthinking. There's an FOMC meeting today. Okay. Stimulus delayed, doesn't change anything long term. Impeachment not going well, doesn't change the flow of money globally. It's all newsworthy, but no. Okay? You're thinking too much. Yeah, you're too smart. Okay. Take a look. Euro buck. Let's look at the euro buck. This was supposed to go up today, and we don't got the up yet. Okay. And I mean, you could. It's inconclusive as far as. That's why I have this. Like, let's start with Confluence. Like, you have to start with what do we know. Oh, my drawing tool's not going to work, right? Yeah, it just won't work. Let's try it again. Says there's an update available. Yeah, it's not working. Yeah, it's not going to work. Anyways, too bad. So what do we know? Right? What do we know? I hope you're starting to think this way too, by the way. Right? I always do this with you guys. What do we know? We know bears will sell here. We know that. We knew it before it happened. Okay? What else do we know? Bulls buy here. Okay? Go. Okay? We also know, oh, and I can't do this. We also know last week was a false bullish rally. Is there an E in there? No. Rally. Raleigh? Rally? Is that right? No. Yeah, no. I'll put it there. Okay? These are just sort of, I mean, that's what it is. Right? So we can continue labeling here. What do we know? This is aggressive bearish sell. Aggressive bearish sell. And we also know this is a counter trend. Okay? At least on the short run, right? Cool. So the month opened in a buy zone, which starts as a counter trend, makes a new lower low, but on this particular week, we assumed 16, 17, 18, 19, 20 weeks ago, this would be a rally, a bullish week, right? Or it could have gone higher. The thing is, I don't know. But this would be an up week. But even though it went up, I'm still, right, thinking this down. Right? Even though I'm a bull, I'm still thinking down because of the seasonality issue. And now it's funny that, you know, I wish these would stick with the chart. Maybe I'm using the wrong one. Maybe it's this one. By counter trend in Fed. Okay, so this is what I'm thinking. Let's see, does that stick if I change time frames? Anyways. Okay. This is what I'm thinking about. Okay, all these other things had happened. They're all there. It's all just part of technical analysis. You'll miss much of it if you don't know seasonality. You'll also miss much of it if you don't have a bias, because you don't know what to look at. Okay? So, right now, right, by the way, false rally means not higher. Oh, and I wish I can draw. I can't use this stupid drawing tool today. Delete. Wonder if I, like, hardcore close it. Let's try that. Control Alt Delete. No, don't do it. Epic Pen. It's not using any resources. And boot it back up. Try it now. Yay, it should work. Cool. The false rally idea on the third week of January is here. And what I said is I don't know if it's going to top out up here or top out at here. But I am thinking, even though I'm a bull on euro dollar, I'm thinking this in January. Okay? Right? Can anybody confirm this? Part of the discussion is if you're a bull, you should think this, buy it anyways, and then don't be upset if it doesn't work out. Okay? And now my thought process is February and March. Now, if you believe all that to be true, good. The next part is, how do you translate that into, let's say, a USD ZAR trade? Oh, did I say January? Sorry. Yeah, Johnny said so going to the swing trading group, I told my swing trading group that the fundamentals haven't changed, but seasonality has, and that they should day trade through January. Okay? And also not get excited about a move here, you're like, oh my God, that's the perfect bullish entry, and I'm a bull long-term euro dollar, so I'm going to go big and it's going to work out. And this is about no. This is a false rally. Don't believe the hype. Don't believe the hype as unequal. Can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunk. Yeah, had to do that. So, yeah, that's the perfect entry. Weekly M2, monthly M2 on the third week of January. I mean, come on, seriously, right? And it's not going to work. That is, I mean, that's a heck of a prediction, right? 20 weeks in advance. I mean, think of it. Monthly, weekly, on the first day of the exact week I predicted, and yet it's so perfect, it's not going to make a higher high? Yeah, it's false. Don't believe it. So anyways, cool. But I will buy this, but I just don't expect it this month. So yes, so like Johnny said, this month, swing traders were actually supposed to be day traders. You can start with €1,000. What would I suggest? One, don't trade. Start with a demo account. Two, get some sort of education, online, books. Just hang out here, watch the 5,000 videos I've done on YouTube, and take a second job. Okay? That's my starting advice for you. Okay, you're undercapitalized, and that's okay. But you're also undereducated, so I would focus on knowing the market first before you risk money. Think about it, right? Think about it this way, S10. You're relatively new to Forex, and you're going to compete with billionaire hedge fund managers that have teams and staff of quants and, technical analysts, fundamental analysts, mathematicians, PhDs. And they know what they're doing. They have 20 years of experience and they have tons of money. And you're going to take them on as an equal and say, I don't really know what I'm doing, but I'm going to throw money at this. I mean, it does make sense, right? So focus on, in your first 2 or 3 years, focus on just learning the rules of the game. So at some point you can make a decision on how you would like to invest your money and trade in the market. Right? Here's the cliche. You open an account, you have €1,000, you don't know what you're doing, you want to turn it into 10,000 euros, and you will end up poor or more poor. Okay? So just don't even go down that road. Don't be a cliche. Your mother wanted more for you. Okay? All right. What are we doing over here? I guess we got to do some biddy. Huh? We got to do some biddy. And it really doesn't show much direction. Now, you're going to say, well, Wayne, this is... Okay, that's fine. But what I'm looking at is, what's the meaning of these projections? Okay, if 2 standard deviations above and below, like, how important are they? What I'm looking at is, where are traders trading? And I don't see logical conviction. It looks like fatigue to me. Okay. Pound Aussie, I don't trade relative strength trades. So that might work for today. That's cool. As long as pound is strong and Aussie is weak. Is that the case? On goes back to here. What I'm saying is, I don't think smart money is trading this right now. Okay, this makes total sense to me. This makes total sense to me. Okay, this makes total sense to me. Even this makes total sense to me. Right now, it just looks fatigued, like the real money isn't trading it at the moment. This is pigs fighting pigs, not bulls versus bears. Mikhail says, pound isn't strong today. Well, the question is pound versus Aussie. So, for example, the easy way of doing it here is on this time frame, Aussie is weak, pound is strong, so you probably are long pound Aussie. Great. It won't be like that tomorrow, most likely. So that's why I don't trade that way. I trade based on macros, but hey, that's a pretty decent trade today, I'm sure. Okay. Right on, Ray Ray. I think I still have a Eurozar on. Yeah, I still got one here at 1860, 1865. Okay. So what we were doing, I think this was yesterday, or maybe I did this for myself. Maybe I did this for myself. Down, up, down, okay, is my thinking in the context of the much larger, much bigger, okay? So I looked like, to me, this is a rotation in. Oops, that's supposed to be blue. Okay, this is an old man easing into a hot bath. Okay. Okay. Oh, long term. Well, once again, I don't understand the fundamentals there. I mean, you could argue it, I'm sure. You can, but like fundamentally, how much business does the UK do with Australia? I mean, a lot, but relative to the entire foreign exchange market, probably not that much. So you could specialize in the pound, for example, and you could have an opinion like Brexit was way overkill and the pound was way oversold. So generally speaking, over the next 5 years, you're going to be bullish on the Great British Pound, and you've been watching the central bank, and you've been watching this, and once they get through COVID, and once that you just believe everything is all up for the pound. Cool, man. If that's your opinion, and you can back that up, cool. So that means now you would want to be selling Aussie dollar. Well, then I said, whoa, wait. Do you believe there's going to be global macroeconomic expansion over the next 5 years? And you're like, yeah. Well, then Aussie would be strong. So now I got a problem. Like, okay, I don't mind you betting long on the pound. Okay, you probably have some insight that I don't have. Cool. And was it oversold during Brexit? Possibly. So I don't mind your being long the pound, but then I don't want to be short Aussie dollar. So I'm like, I can't do that. Okay, that's where you lose me. Okay, Revelations. So I'm like, well, that doesn't make sense macro-wise. So I would rather you just say, if you want to be long pound Aussie, why don't you just pick the pound, and anytime the pound is strong, find something to sell it against, right? Sell something to sell against that strong pound. And it might be Aussie, it might be CAD, it might be dollar, it might be yen. I mean, find something. But long-term pound Aussie, it just doesn't make any sense. Now, you might show me a chart and say, Wayne, look at this chart. I'm like, I don't even want to see your chart. It doesn't make any sense. Okay? It's a giant fundamental gobbledygoo. Okay? So the worst thing you could do is show me an amazing chart that I might believe, but it's an illusion. It's a mirage. I don't want to even see it. Okay? So that's all. XTrader1 FX is so you stay away from most major crosses. Not, yes and no. So So the conversation we had yesterday is I want you guys to specialize in one currency, not a currency pair. That's dumb. Okay? In a currency. Therefore, if Revelations focuses on the Great British Pound as a bull, then yeah, okay, so maybe today you're buying pound against the Aussie, but maybe next week buying pound against the yen, or buying pound against the US dollar, or buying pound versus CAD. And you could switch that around, but the same theme exists. Great British Pound long. And you'd have the fundamental reason for that. But you'd have to switch it up. So therefore, you would have tons of these major cross pairs, always long the Great British Pound. Okay? But for me to trade pound Aussie today, only because in the last 24 hours, pound has been strong and Aussie has been weak. The problem I have with that is there's no reason why that would continue tomorrow. Because I'm trying to stay on the current. Again, the example is I'm Thor Heyerdahl, and I'm on my raft in the river of Forex, and I'm just going to go with the current. And there might be stuff going on over there, and the stuff going on over there. It's irrelevant to me because I can't get there. There's no current there, so I just keep floating. Oh, pound Aussie Ripper strong today. Wow, cool. I hope you're killing it. Not interested. Right? You see it? So I'm not against you trading it, and you might crush it today. You might make a ton of pips. You might put money in your pocket. Awesome. I'm really happy for you. I'm not interested. Okay? Okay? So again, there's nothing wrong with it. It's not what I teach because it's not what I do. Okay? So if this happens, I'm out. Okay? I've been in this trade, a week and a half or something, and I'm up 10%. Internal rate of return. So if I had traded $1 billion, I would have collected $100 million in interest. That's a pretty good week. Do you understand now? You could argue that, oh my God, then you're way over leveraged. To have one mini lot on a $35,000 account, you could argue like, well, Wayne, that's ridiculous. 10% in a week? Just interest? Oh my God, cut your lot size. And now you can see why I could have, right? Where I've definitely had rules where I had no more than one mini lot for every $100,000 in cash. Not trading money, cash. Okay? Which means $1 million in cash to trade a standard lot. And now you're like, well, dude, I have $10,000 and I'm trading a standard lot. I'm like, yeah, I would say you're taking more risk than me. Your risk of ruin is higher. Now you're going to make a lot more money than me, but I'm only trading one standard lot with $1 million cash times 100 to 1. Right? You're like, oh my God. You can see, right? Like how you could argue these things like just tone the risk down. Okay? Because imagine all you need to do, guys, is if you showed institutional investors, or anyone really, that over, let's say, 2015, 2016, 2017, 2018, 19, and 20. Okay, these were all very different years. We had the Fed going up, we had the Fed going down, we had earnings going up, we had earnings coming down, we had trade wars and presidencies, all kinds of things going on in this period. Okay? Markets going up, markets going down, markets going up, just all kinds of stuff, right? and you said, I did 35% this year, 35% that year, 35% that year, 35% that year, 35% that year. Meanwhile, what the stock market's doing 10, 8, 4, 7. And in 2020, yeah, okay, it was up 35. But with way down and way up, so now your Sharpe ratio's down because the volatility was up. So you're down 35, you were down 30% and then ended the year up 30%, which means you were down 30%, made the 30% back, and then added 30%. So the volatility would be very high. So your Sharpe ratio as a stock trader would kill this. But what if you just did the 35 every year? Now, relative to your benchmark, you did the same, but your Sharpe ratio would be significantly better. Okay? And you're like, but all you do, that's it? 35% a year? I'm telling you, money would rain out of the sky for you. Okay? And I'm saying on one mini lot, I'm earning an internal rate of return of 10% a week. Like, you could argue, like, you don't need that kind of. I should be trading a micro lot. Or on $1 million, I'm only trading a standard lot. Okay? Now, the other part of that is it's an IRR. IRR is tricky. Okay? So I tell you, right, in hedge funds, or in particular venture capital funds, love using IRR. And to me, it's a trick. Okay? What does it mean in a 10% internal rate of return? Does it mean my 35K is up? $3,500? No, of the money I placed here, okay, so of the 35K, I moved $100 into a trade. Leveraged it up, and I was able to trade $10,000, right, on the $100. And from that, I'm earning interest because I loaned it to South Africa. So I ponied up $100 to borrow $10,000 worth of euro. Then I lent the euro to South Africa. The South Africans pay me interest on the $10,000 worth of euro that I lent them. And that equates to, I made $10 in a week. 10. But I only ponied up 100. Okay? So then you're like, well, that's nothing. See, that's the problem, right? That's the problem. Everyone's like, well, it's nothing if you do one trade at low risk. And you say, well, Wayne, it's only $10. So what you do is you put a standard lot, you put in 1,000 of your money, and you go, and you can't handle this. And you're right. What I'm suggesting is, if you understand the long-term trend, you might come to an opinion, because of course nobody knows the future. You come to the opinion that Eurozar or USDZar will be lower at the end of the year. Okay? And from that, you do, right, by the end of the year, you have 30 trades open. Okay? Okay? 30 times 100. Okay? So you got 3 standard lots. Okay? and you're all short. And now your account has 10% exposure to your rand. Now, you might have made 75 trades, most of which broke even, but you let them run, so at the end of the year, you got these running. And you're collecting from the 10% of your portfolio, you haven't invested in high yield, you're earning a really nice income. Okay? Okay? So instead of $10 a week, you're earning $100 a week times 3, so you're earning $300 a week in interest on this trade. Same kind of internal rate of return on that, but you have 30 trades with an average of, let's say, 500 pips each. So you have 30 trades with $5,000 profit on each one. Now, how's your internal rate of return? Okay? That's where I want you to get. I want you to think about, at some point, not in day one, but I want to get you there where you're like, weighing $10 on one trade relative to my account size is nothing. But that's not how you should be thinking. At some point, once you understand the flow of money globally over longer periods of time than the next 2 hours, right? Like pound Aussie might be strong the next 2 hours or 2 days, but it doesn't make any sense. You would never base a portfolio on that. Okay? Okay? But if you can have some conviction in the longer run, right? Stay small, stay humble, focus on the long term. I tell you this every day. I want you to have lots of tiny trades. At each trade, you got the stop at break even. You have nothing to lose. And if you enter a trade and it fails, they're so tiny that it's a rounding error. You wouldn't even notice. Because your trades are worth more. They're more valuable because you were able to create more value with your analysis. So you let them run. Okay? And in this case, you're collecting asset appreciation. Plus income through high yield. Okay? And the cool thing is you don't get paid quarterly, you get paid daily. Okay? Okay? So, I'm not shocked if there's going to be more up before there's down. Okay? This is not my Alamo. I will not defend this. I will not be deterred by it. In fact, I think euro is going to be strong starting in March. So I don't have much conviction for this one at all. Much rather be short USD Rand. But we'll get there. Okay? But imagine if each one, every trade like this, you have at break even. Like if it comes up, knocks you out, you don't lose any money. You're like, oh, too bad. Okay, oh, too bad. But if you had dozens, so imagine if you tried something like this 100 times over the next year, you're going to get 25 or 30 or 40 or 50 to stick if you got the trend right. If you got good gain. Okay? And that's how you'll do well by the end of the year. Okay? There are many people in this group that got to their first 5,000 pip month. And before they knew how to trade properly, they couldn't even imagine a 1,000 pip month. There's gurus promoting 200 pip months as being a good month. So I'm like, oh, well, wait till you get your first 5,000 pip trade. And you're like, what do you mean 5,000? That's stupid. You can't make 5,000 pips a month. Like, yeah, you probably can. But wait until I teach you, right? So how do you do that? You have to have lots of little tiny little trades that you let run. And over time, you'll increase your assets under management. Therefore, you'll increase your lot size, and you'll have the same amount of risk, just larger reward. Okay? Cool. Anyways, small, humble, focused. Okay? All right, so peso, same thing. We're early on this trade. I told you yesterday and the day before we're early on the trade. There shouldn't be any special activity until maybe Friday. So, yeah. Okay, so that's a repatriation setup, by the way. So we'll play with that. And this is the one I'd rather be on. Okay, so this one I might take later. Plan A was off the 3A2, but it was doubtful. Plan B is up here, and it's a bit elevated, so I need the rollover first. So we'll see how it goes. Okay, maybe we need the Fed to say more for longer, which is a big difference than less for longer. So if the Fed comes out today and says more for longer, then maybe I get my move, I get my entry, I get my game on. Okay. So now we're looking at, really it's this. So this is a maybe. Okay. Alton started shorting pound, and who was it? I forgot now. Someone was buying it. So yeah, there you go. That's why I stayed away from it. All right, cool. So that's that. Let's look at some yens. By the way, you guys happy? Is it good? Am I doing a good job? Hey, I'm an only child. Shower me with love and attention and affection. It's all good. Yeah, my parents thought it was weird that I would talk to my invisible friends when I was a child, sitting in the corner, talking to my invisible friend. And look at me now. I'm sitting here for 2 hours a day talking to people not in the room. I'm still talking to my invisible friends. They're like, that kid's weird. No, he's doing a thing called a webinar. Yeah. I still think I'm going to wake up in a mental institution finding out that I've been talking to all my invisible friends. They're like, dude, does he even know the laptop doesn't work? Yeah. Yeah, I might be in a coma. Yeah, they're like, oh my God. Wake up, it's a dream, right? I wake up, buy the pound, buy the pound. They're like, oh my God, he just came out of coma. Anyways. All right, so yen strong. All right, cool. Great, nice. So you can see these step downs and step ups, and this says take a break, take a walk. If you're a bull, of course, so you can see I only have it set for bullishness. This one I only have set for bullishness. How do I feel about this? It doesn't smell like higher highs and higher lows to me. But maybe, right? Maybe. Just not maybe now. But check that out. That looks nicer. Okay, so is this a floor? Yeah, maybe tomorrow. Maybe next week. Maybe. I mean, maybe. Okay? Maybe. And that's for you to decide. Maybe if I'm a bull, I only have this as a bull, right? Next projected bullish buy zone. So yeah, I could do something. I could play this. I think we're 6 weeks early for that though. But I might do it anyways because I don't know. Okay? Okay? We don't know. But I'm certain this will be higher at the end of the year. So I might take the shot and manage the risk appropriately. But see, I have clarity of mind. I'll take the shot and I'm like, yeah, it's probably not going to work, but that's a setup. It's a higher high off of bottom on support. So I'm going to kick it off the 125.50, take a shot, shoot one off the port bow. And if it takes off, it takes off. If it comes down, I lose a tiny bit or I lose 3 pips, right? Because that's break even for me, right? So I either break even or I lose a few pips. But remember, my trades are tiny relative to my account size. So, like, who cares? What's the point? Oh, well, your winning ratio. No one gives a damn about the winning ratio. Okay? So, you got to be in it to win it. Well, you can't be a degenerate gambler and bet, but you can tiptoe into the tulips. And if that don't work none, then you wait. What's the next one? I mean, you have to say, is this support? Is this support? If it's yes, then you're going to have to take a shot. And you can't be afraid of losing. You're only afraid of losing if it's a lot of money, if you can't afford it. Well, you're not supposed to risk money you can't afford to lose. And you're not supposed to be leveraged up. You're supposed to have low leverage. So, like, what do you care? What do you care? Like, it's tiny. Are you a bull? It made a higher high. You buy the higher low at support, right? Good. So are you going to do it? No. Okay. Now, if it comes down, then what? Well, then you say, well, what's the next level of support? Would you buy it there? Would you buy it there? Would you buy it there? Right? So that's what we do over and over and over, over and over and over, over and over and over, right? Well, we know yen tends to get strong into repatriation flows due to taxation. Okay, the fiscal year end for Japanese businesses is March 31st, which means Japanese businesses, their CFOs, are transferring money from their overseas operations back to Japan to pay taxes. We know this to be true and self-evident. Okay? So you already know that. Like, you already know that. Like, I know I'm preaching to the choir here. You already know that that flow is going to happen. Okay? So therefore, you got to tiptoe because we could be all the way back to 120 before we get that shot. But once that happens, you have to understand, once Toyota, Honda, and Mitsubishi, right? Sapporo, once they are done moving their money back to Japan for taxation reasons, then that flow will then reverse. So right now, the flow will be to Japan. Again, we already know this. Okay? The second thing is, they're not going to do it over and over and over and over again. They're doing it for a reason. There's a business reason. Again, Forex is about business. Forex is not Fortnite. It's not a video game. If you get it wrong, you just reset it. That's the road to poverty. So like to the new person that says, I have 1,000 euros, what should I do? 1, A, get educated. B, watch all the free videos. And C, get a second job. Because when you don't know what you're doing, coming to Forex is not going to make you money. I'm a professional. I've been doing this for 20 years. I can beat you. You've been doing this for 2 weeks. I've been doing it for 20 years. It's not even going to be fair. It's not even going to be a challenge for me against you if it was a zero-sum game. Okay? So I'm like, hey, put your money in the bank account, get a second job. That's the best way for you to get rich. Yes, it's going to be slow. It's going to take your whole life. You're going to have to save and invest your money. Yeah, well, that's what I'm preaching. So the next thing is once you get education, you can maybe build a business around your foreign exchange trading, but you're like, wait, you don't know Japanese money flows? Right? Well, then you're going to have to learn these things, right? So, I want to buy euro yen. I think it'll go up. Today? Tomorrow? Next week? No, actually, no. But if I get the opportunity, I'll probably take a shot anyways, knowing that even if I'm long-term long-term right, medium-term wrong, I'll probably still make money today because the rules of engagement are clear. I only buy higher lows at support. Now, if the overall flow of money, let's say it goes against me on the short term, I'm going to buy a higher low at support. I'm almost always going to do okay. Now, okay might be knocked out of break even or knocked out with a smaller profit than I was hoping for, right? So I'm going for here, but I get knocked out here. Okay, but I'm still, thinking this long term. Now, I have to adjust for reality, because what I don't know is, will I buy here? Or you project this out now. Will I buy here? Or will it come all the way back down here? Honestly, I don't know. Okay? This is the thing. I don't know the future. But I have certain assumptions and beliefs. Okay? But it may not happen. Europe still hasn't passed a vaccine. United States has vaccinated more people now than people that got COVID. Isn't that strange? 25 million people got COVID. 25 million people have been vaccinated. So you're like, whoa, that's kind of strange, isn't it? And Europe hasn't even selected a vaccine. So it must suck to lay in a French hospital in Paris with COVID, watching TV, seeing all the Americans get vaccinated. And they're like, this is the greatest thing ever. Right? And you're like, So that might be a drag on the euro. Every little bit of socialism creeps in somewhere. So Europe is capitalist and democratic. And so is the UK, so is Canada, so is the United States, so is Australia. But there are different decisions that are made on how to manage the distribution of income. Neither is right, neither is wrong. Both have flaws. Nothing is perfect. They're just different decisions. Sort of like personalities, if you will. Okay? So now, in the United States, my mother-in-law, my father-in-law, and my father, and my mother-in-law, no, my father and my guest stepmother, they're all being vaccinated. Have been vaccinated or in the next couple of days are being vaccinated. So every elderly person in my family in the United States, well, I still have a father-in-law too, don't I? I have to check up on him. But anyways, they're getting vaccinated, have been vaccinated, well on their way. And my mother in Canada, I think, is like, we don't know nothing about getting a vaccination anytime soon. Like, I don't know, by the end of the year maybe, right? So it's interesting how these things intertwine. So and how and it's funny too because of the personality of the society or the society's choices will impact things like GDP. And GDP will impact how long you live, how healthily you live, what kind of job you have. It's very interesting how they're all somewhat intertwined and that there is a consequence for it. So, for example, Spain will always have 10% unemployment. And you're like, well, Wayne, that sounds horrible. Well, yes and no. It's just different in Spain, and they make different choices. And, but you might be 30 and you don't have a job because for a 30-year-old, it's 20% unemployment. But you get free university, so you just sit around, you smoke, you drink wine, and grow your hair long, and learn how to play the guitar. And by the time you're 40, you have, you have 37 years of education, and you're making $5 an hour. Right? But whatever. I mean, I'm being way facetious. And there's probably a lot of Spaniards very upset with me now. I'm sorry. Whoa, settle down. I'm saying that there are consequences in good and bad. So, whatever. Okay. So how quickly and how aggressively do you choose a vaccine? So the Americans might be wrong. They picked a bunch of things really quickly, and that starts the zombie apocalypse. Or they get it partially right or mostly right, and the U.S. economy rebounds much more quickly because we already have, 5 different vaccines, and France has none. Same, right? They're just making different decisions in a different way. Okay. So I'm very interested in international political economics, which combines economics with the societal decisions, meaning what kind of government gets elected or gets put in place or takes the place of the decision maker, and then what is the impact or the output of their decision making. If you lose your job, does the government care? If you lose your job, do they take care of you, and to what degree? And they're all impacting, right? Okay. Oh, they have. Okay, thank you, Jeff. Do I read the news? No. So I got to be careful on that, right? I got to be careful on that. I read economics. No, I think I heard someone else talk about it. So that's, there you go. I heard somebody say. Anyways. So one of the things I say about the Americans a lot when it comes to like financial crises, the Americans kind of are part of the problem where money is cheap, so therefore you take all the money and you become a degenerate gambler, and you create bubbles and you push things and you go too far, and crooks take over the finance industry and all this kind of stuff, and then it all blows up and everyone's like, it's the Wall Street people or it's these other people, or right, and there's this giant blow up. But the other side of that is the Americans will admit that they've made a mistake very quickly, and they'll do whatever it takes to fix it. They almost reverse bubble, right? So they fix a bubble with another bubble. But they do something hard and fast, where in Japan, they'll do nothing. And in Europe, they'll talk about it, but do nothing, right? So there you go. Right? All right, cool. Let's take a look at commodities. You guys want to do commodities? Okay. So what do we know? This is bullish. This is based on this period, the projection. So it went a little higher. So you have to think about demand and supply. We found out supply is likely to be less and demand will likely increase. Oops. So, if you were in an economics class, let me redo this. If you were in economics class at university and they showed you this, okay? What is the right answer? Does price go up or down for oil? Let's see if anyone's got the big education on this one. Does the price of oil go up or down? This is dollars, and this is quantity. And this is oil. Okay? Anyone want to take a guess? We're going to find out who actually has an economics degree. This is going to be great. We'll see what you guys come up with. No harm in guessing. Someone will know. There's a very clear answer. Come on, anyone with an economics degree. If you have an economics degree, type in the answer. Yeah. This is cool. By the way, thank you for guessing. Yeah. On a double shift, okay, demand goes up, supply goes down. Okay. Actually, so the answer always is when there's a double shift, it's indeterminate what the price is going to be because you don't know how big the shifts are going to be. They can offset each other as much as they can influence each other. So the correct answer, if you were in an economics exam, is indeterminate. And of course, what students do is they're like, well, the equilibrium was here, and then the equilibrium, wait, we shifted the demand, and then, wait, this goes this way, so supply shifted here, but then this shifted to here, and then this, and then you're like, whoa, and then you're like, wait, which one do I do? And then you're like, so, right? So, which equilibrium? And you get all lost, and you end up spending 20 minutes on this. The answer is indeterminate because you don't know how much each one will shift. Because the Keystone pipeline, okay? Did supply go from supply 1 to supply 2 or supply 1 to supply 3? How much did it shift? We don't know. And demand, what's future demand for oil going to be? Is it going to go demand, so if demand increases, is it going to increase this much or to D3? Or is demand actually going to fall to D4? And then all of a sudden, like, you don't know where the equilibrium is going to be, and you could move around. So the answer anytime you get a double shift is it's indeterminate. It's a trick question. Yeah. So there you go. There you go, Marina. I know it's not fair, but the thing is, anyone with an economics degree would know that immediately. You're like, oh, well, you can't determine it. Because what happens is you've studied it and studied it and studied it. Multiple shifts for multiple reasons to multiple degrees. But the answer is you can't actually calculate it because you don't actually know the shift, the degree of the shift, right? So anyways, this is just, and by the way, every economics student has gotten that question wrong. So Yeah, you just don't know by how much, to what degree. Because very often you can double shift. Let's see if I can do this right. Okay, let's see if I can do this. Okay, demand and supply. So, like for example, you could shift this way. No, I didn't do it right. Okay, so you got some shifting here. Okay, and you could do it this way. Let's do it in orange. So we went from quantity 1 to quantity 2. Okay, but no change in price. You double shift, and nothing changed. But if it changed slightly less or slightly more, it would have changed. Right? So you just don't know. It depends on how much of the shifts. And of course, your model is not going to get that perfect. Right? There's no way. Okay? So hopefully that makes sense. If I do it that way, you can have a double shift and there's a change in quantity, but not by price. Okay? And it's not actually equal. I mean, I guess it's sort of equal, but not really. Because also, when you're looking at things, curves are often like this as well. Okay? Right? Curves can be... So yeah, it gets really fun. It's stupid, in fact. Nothing better to ruin something cool than education. All right, here we go. Biddy on the way down, breaking the 30 mark, breaking the 30 handle. Nice. Come on, strength. Dollar strong. Dollar strong. Who would have thought? Okay. Who would have thought? Besides us. Cool. Dollar strong. Probably another 6 weeks, I would think. Let's throw a Hail Mary guess on this. Let's do some thinking, okay? You ready to do some thinking? Let's go back to this. We brought it up the other day. FOMC 2021 meeting schedule. Okay. Okay, how about that? Could I be so bold as to say somewhere around the middle of March? How about, what day is St. Patrick's Day? Is it the 14th? I'm going to start selling US dollar. St. Patrick's Day. That's funny on, huh? Amazing. Everyone getting out, though. That's the thing. That's dangerous. Everyone's getting out. So dumb money's going to buy it, right? Oh, it's the 17th. Oh, so it is that day. Cool. So yeah, St. Patty's Day, I start selling US dollar. Now, do I know that to be factually true? I know that that's when I would want to, that I would like to, that I would expect to, that I would look to. Maybe we do it a week before, maybe we do it a week after, maybe we don't do it at all. But I can set myself up mentally and emotionally to be ready, willing, and able. Essentially, I am going into the jungle when there's no enemies. I'm picking the high ground. I'm setting up crossfire positions. And I'm setting up booby traps. And I'm going to sit in the jungle and I'm going to wait. And if the bad guys start tiptoeing through my tulips, it's not going to be a fair battle. It's not going to be a level playing field. I'm going to have an unfair advantage, and I'm going to win. Yes, but Jeff, we already have this set for the entire month of January. We already knew all of that. Okay? We knew the first week, okay? The first week in here. We knew sometime in the first week of January, the dollar would get strong. I don't mean like I casually mentioned it. I mean, I hardcore weeks and months in advance to say, get ready, it's going to happen. Not specifically Bitcoin, but specifically dollar. So dollar versus everything. Okay. That's that. Okay. A lot of people betting on this move, but we also knew that that wasn't likely to happen. That's the third week. That's a false rally. It's false. Don't believe the hype. Isn't it interesting? Xtrader FX is third week of March, seasonally high. Well, that's what I just said. But what is it? It's the March Fed meeting. Okay, I'm trying to make all kinds of points here, guys, that you can learn this, you can understand it. It's not a random walk down Wall Street. It's not even a zero-sum game. You can learn how to do all this, okay? I'll remind you, I'll say it again, because I know I brought it up a couple of times, but it's real. This happens in my life. It's real. My wife says, I'm booking our vacation for the June. And I'm like, oh my God, what the hell are you doing? And she's like, what? We want to go to the beach. And I'm like, whoa, 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 whoa. When? And she's like, well, like the first week of June. I'm like, there is absolutely no way we can go on vacation that week. No way. Absolutely not. Cancel everything. We cannot leave for vacation until the Friday after the June Fed meeting. Do I still have the calendar up? No. No. So we have to do it again. So my wife has to do this, just like I show you. FOMC meeting schedule. Okay, so we can't leave until June 18th. It's like, I want to start selling dollar that day. I'll probably take profit this day. Okay? And I'm going to be long again in here. And I'm going to get out here. I already know the future. Because I'm wicked smart. Okay? So Johnny, summer starts Friday after the June Fed meeting. So last year, Friday after the Fed June meeting, I said, this is it. Welcome to summer. I said, smart money will leave the market, get in their private jet with their beautiful people, and fly to the beach. And then, on Monday, I showed up for my webinar, and I'm on the frickin' beach. Smoking a cigar at 8 o'clock in the morning, which means I had to get up at 6 and shower and meditate, check the markets, grab my laptop, find the place I had searched previously the day before for Wi-Fi access, and then get my coffee, and then go down and walk out there and sit there like an idiot talking to his laptop while people are walking past me. Do you know how weird and awkward that is? Not to mention I'm on vacation and I have to get up 3 hours earlier while my wife and children are sleeping. Pretty remarkable, actually, huh? Would anyone here find that awkward? To be sitting with your laptop on the beach as people are walking by and you're talking? You're doing a live stream on YouTube? And people are just sitting next to you going, is he talking about Bitcoin? Yeah. But it gets done, right, JDR? And so not only do I give the advice of where like, okay, this is the exact day of summer, but then I also carry that out. And again, in personal conversations with my own wife on when do I take the family on vacation, we plan these things around Fed meetings. So do you think I actually believe it's important? Yeah, Daryl's like, yeah, totally. Yeah. You know, very often they're intrigued. They're very intrigued. People love Forex traders. People love Forex traders. They love them. Everyone is so amazed. Foreign money, cash, I don't know what it is, but people love them. And the cool thing is if you work for a bank, everyone admires the Forex traders. First of all, they make a lot of money. But so do investment bankers. What's the difference between an investment banker and a Forex trader at a bank? They both make good money. What's the difference? And why would an investment banker be jealous of the Forex trader? Jealous. They both have Lambos. One has, no, I mean in the bank, Johnny. They're both making $1 million a year. They're both working for the bank. Now you got it. Not the tax because they work for a bank, whatever. It's the same taxes. They get a distribution plus a salary. They get a bonus at the end of the year plus their salary. Taxes are the same. I'm not talking about an independent trader. I'm talking about the one that works for the bank versus the investment banker. No, Forex, you guys aren't following. They're both working for the bank. They're employees. Those that say freedom and spare time got it correct. The markets close Friday at 5 p.m. So they get their beautiful people and they go out Friday night. And they go to the club and listen to jazz and have some cocktails and do some dancing. Okay? And then they go to the beach Saturday morning and take the dog for a run. Meanwhile, the investment banker sleeps in the office. Works all weekend. Absolutely, totally true. Investment bankers typically are less than the age of 40. And if you're 40 years old as an investment banker, you are by far the oldest person in your department and you're the boss's boss. And you're making massive amounts of money, but you gave up your family life. You're either not married or you're not happily married, right? Because you're married to the bank. Yeah, you make huge amounts of money, but you have to give up everything. Forex trader, market closes, they go home. Okay? And the IB guys are like, oh my God, those FX a-holes, right? So now, there's so many advantages. One of them is you can plan your trades for the day, for the week, for the month. You can plan them around Fed meetings. You can plan them around seasonality. There's very rarely a shock. Now, you still have to do the work and carry things out and have the discipline to execute. And more importantly, you have to have the discipline and the self-awareness to know that you're wrong. That's difficult. This is a difficult gig. But nobody here should be surprised that dollar got strong starting the first week of January. Nobody should be surprised. Nobody. None. Zero. Okay? Nobody. Strong against gold. I was going to look for other ones. Strong versus euro. Strong versus, what should we do? We can try this one. Strong versus yen. Okay. These ones are tougher because they're both funding currencies, right? But nonetheless, dollar is strong, and you knew it. This is going to kick me out of my exotics trade. I'm okay. I knew that would happen too. I still got to take the shot in case I'm wrong. Wrong on timing, but not wrong on reason. Okay? Oh, you're letting it run off the day trades? Yeah. Yeah, you can see there, like even this one is a clear swing trade, right? So the cool thing is, I want you to learn the currents. Don't get caught up on making a bunch of money quick. You'll get better and better and better. And if you want to do those types of trading strategies in year 8, year 9, year 10, by all means, because you have alpha, you're generating value. But if you're young and new, don't look at Forex as a way to get rich. Look at it as a business. I want you to look at this like a startup. I want you to think about what your strategies are. You should even have a business plan. I did pro forma cash flow statements 4 years into the future to understand things like risk and reward and the paradoxes that go along with all of that. So I want you to think that way. I want you to think of Forex as your small business. And think about it. There's no successful business that has ever operated without a business plan. So be a business person. And I think you'll do just fine on the long run. So peace on earth. May the pips be with you. May our profits be above average. And I will see you tomorrow. Have a wonderful day. Thank you for being on my team. Thank you for all the positive energy. You're good people.